Good afternoon, ladies and gentlemen. Let's begin the next session post-lunch. I request everybody to kindly take their seats so that we can proceed into the next session, which is on defense space innovation, venture funding, and investment opportunities. This session explores the diverse funding and investment opportunities in India's defense sector. Industry experts, financial institutions, government representatives, and defense technology companies will discuss various mechanisms supporting innovation in national security. Topics include government initiatives, bank financing, venture capital and public-private partnerships. Stakeholders from startups, MSMEs, and established players will gain insights into accessing capital, navigating funding challenges, and leveraging the strategic investment to drive indigenous defense technology. The panel will highlight how these funding sources are shaping India's defense capabilities and fostering a robust innovation ecosystem. For the same, may call upon the chair and the moderator, Lieutenant General Vinod G. Kandhare, PVSM, AVSM, SM, Principal Advisor, Ministry of Defense. And the panelists, Ms. N. Ranjana, Director DSTA DRDO, Mr. Ame Belorkar, Senior Vice President IDBI, Mr. Raj Sethia, Managing Partner MGF Kavach, Mr. Rajesh Doshi, Managing Director Steel Advisors, Mr. Ayush Bagga, North India Head T-Hub, and Ms. Kriti Upadhyay, Founder, Indus Tech Council. Over to you, Chair.
Right, ladies and gentlemen, this is post-lunch session. And I thought money is most important, but least number of attendees. So I don't think people are interested in money. Okay. Anyway, what we have to do is we have actually 55 minutes, and it's a very big panel. And I think I should speak the least because these are the people who have to give money. And we can start with Dr. Ranjana, 5 minutes each, so that we have time for question and answers. By then, hopefully, people will come.
Good afternoon, everyone. Thank you, sir, for inviting me first, because government has the, most money, but the least most constraints also to give the money. But nevertheless, there are a lot of initiatives which are being taken by the government to promote the R&D in the country. And it was in 2022 budget that we are all aware that 25% of R&D is to be done by industry and academia. And thereafter, a slew of measures, slew of schemes have been started to open it up to the industry. For very reason that the R&D requires much more arms. And the technology has many stages. Wherein, you have to go lab to the production. There are many stages which cannot happen in lab environment alone. So these are some of the rationales which are excellent premises to start doing the research together. Now, having said that, all along the research was happening in the academic areas, mostly academic for publishing and the fundamental principles of the science and technology. Very few were happening which were being taken as a product to the say the production houses or to the industry. Making all three work, so DRDO has been investing in academia for many years. I don't have to talk about it, about 60 years. But what we had come about was the Technology Development Fund, where the industry is being invested in to take up the indigenization of the technologies that we are using for the defense application. Parallelly, there was another scheme which was laid out, which was DRDO Industry Academia Centers of Excellence. And now this is where we had to bring not only the academia, but also the industry together to do the R&D together. And we know making people work together in a seamless way is one of the most challenging work, especially where there are a lot of uncertainties which are related to the R&D and the technology development. But yet, we have taken the plunge, and I'll tell you, almost 4 to 5 products have become so mature that from the academia directly we have handed over to the industry. And more than that, there are a lot of absorption. So I can just tell you, DRCOEs, basically they are under long-term directed research policy. There are two major streams of work that is going on. The DRDO defines, we want to say design this sensor or this device or this particular module or this particular simulation, which goes back and sits in the DRDO design systems. The another stream where the thing is becoming so mature, it is reaching TRL 4, so that to TRL 5 directly we are allowing the industry to take the TOT from the academia itself. It doesn't need to come back to DRDO in any way for the procedurally. Only technically we will be guiding it. Now, this has shortened the time cycle, and on the 19th of December, we have signed 10 tripartite MOUs between the industry, IIT Delhi and DRDO. 3 of them are TOTs. Fair enough, the TOT will be produced by the industry. I'll tell you the 7 other parts, 7 other memorandum of agreement. Basically, these are where industry is working along with us as co-PI. Now, how we selected with co-PI, there is a process which is being laid out, and it's being well-oiled machinery. It's working because academia is spearheading it. But in this, where industry is as a co-PI, we are investing in the industry for certain kind of things where industry will be encouraged to do the R&D for very, very specialized requirements of defense. And I'll tell you, 7 industries are there on board with us today doing, so 6 of them are doing downstream work where they will be making these samples. We will be evaluating it at IIT Delhi, and then final clearance will be given by DRDO test labs, and that is how that product will hit the market directly from the industry without coming to this particular loop. Another one we have taken up with, I would say it's with Reliance, and we wanted to indigenize a particular material which is being imported till now, and it goes as a very important factor in the development of the system. And here there is only R&D together with the IIT Delhi. There is no funding involved because there is a lot of byproduct available, patents available, and there is a lot of infrastructure available. But this particular product, to become valid for the usage of the defense forces, all 3 needed to come together, and we have come together. DRDO is investing in IIT Delhi to take this forward. So these are 3 to 4 models which I have worked out, especially on the core technologies, which are baseline technologies, which are not visible as a product, but the country really requires them. All these baseline technologies of materials, devices, sensors, DRCU is investing along with DRDO, along with the institutes. Similarly, 4 more cases are on the track, and we are talking about it shortly in 2 to 3 months. Those also will become memorandum of agreement with the industry, and we will be investing in the industry for specialized kind of equipment or specialized kind of the processes which are required to be established in the country for the first time. So I think this is what I want to talk about it, how we are taking industry on board for the R&D. And these are, I would say there's a very well-oiled governance mechanism where the technical evaluation is thrashed with the experts on board, and we spend 3 to 4 hours of continuous thrashing of every technical aspect of the problem before we give it to the industry to do the needful. And many of the industries are very happy to work in this kind of a model. And I think I invite many industry partners to look at this. There are a lot of expression of interest being asked on very critical technologies through the institutes. We have 15 centers of excellence, and these 15 centers of excellence, each one of them are now raring to go the industry route. In fact, this we call it DRCOE, DRDO Industry Academia Center of Excellence. The I has been activated full-fledged. So this is what I wanted to bring to the notice of the people who are interested in the defense R&D for the country.
Thank you. Thank you, Dr. Ranjana. Over to Mr. Raj Sethia.
Thank you, General. Okay, my name is Raj Sethia, and I come from a fund called Mounted Growth Fund Coverage. You may have heard about it, you may not have, but I'll give you a brief background. We are a Category 2 AIF, which got launched in January, but we did our first close in July. We are a thesis and thesis-based and focused fund. We look at companies that essentially make India Atmanirbhar and critical technologies. And when we talk of critical technologies, you can't really miss the mention of defense and aerospace. So broadly, what we look at is investments in defense, aerospace, space tech, digital communications, cybersecurity, digital critical minerals and materials, and fabless chip design. So those are the areas that we've identified are critical for national security. If we define security in a much broader way, from both border security as well as supply chain resilience security perspective. So what our genesis will tell all of you what we look at and what we hope to do. When we started thinking about this idea, post a lot of environmental factors and tailwinds that were supporting us in terms of policy changes, India's GDP growing fast, and India's geopolitical influence increasing and relevance increasing in the global supply chain, we saw that A, environment was very conducive. B, capabilities in India, both engineering as well as precision manufacturing in some ways, or capabilities to scale up was there. And third, and very important, which a lot of countries can't match despite being very good in manufacturing, is there was a very large domestic market as much as there was a large export market available to Indian entrepreneurs and startups, because of the fact that India has favorable geopolitical alignments with a lot of countries who can possibly buy from India much easier than a lot of other countries, even if they provide it. So while we saw these tailwinds, we also saw there was a gap. The gap was early stage founders had virtually no institutional support. I mean, you can talk about grants, you can talk about IDEX wins, IDEX support, all of them that are great. But was there an institutional support or a VC fund that said, I invest in climate tech and I invest also through my fund too in defense tech? No, it wasn't there. Second, deep expertise that was needed in all the 5-6 areas that I mentioned. You'll realize government is one of the early enablers. Deep expertise that was needed to be able to navigate through both regulatory environment, which is always a little a bit of in a flux, because regulation always does not follows technology development, doesn't work the other way around. And the third, a lot of these companies could possibly go for a larger round of funding if they could see revenues early. And the revenue not necessarily from India, but also from the overseas markets that are conducive for Indian exports. So as a result, when we formed this fund, we took a little bit of a different route. We said we'll not go the conventional way. We'll look at creating a fund that is high engagement, has a clear platform support, and not just a platform support that is nice to write about, but platform support that provides acceleration, business development, regulatory navigation, and subsequent fundraisers subject to milestones in a manner that is needed by the startups, which was going way beyond just giving advisory services, which everybody is willing to give. So that was the genesis. What it tells you is we are looking at solving a major problem. We are very passionate about it. I'll encourage you to go to our website. It's most of our advisors, and actually one of my co-founders, they don't like their names being dropped, but I would love to have you all see the kind of people who are working on this mission, virtually in a mission mode, literally and figuratively. Other than that, we have built and we're building our platform to be able to help these startups, all deep tech startups that qualify under ISET, which is beyond defense, but defense is a critical part, space is a critical part, through very, very concrete capabilities that make us attractive to startups. But more important, from a fiduciary perspective, we also owe a healthy return to our investors. So it allows our investors to have a belief in us that here's a fund that is working not just with their money, but also with their genuine efforts and investments that allows either superior sourcing or superior acceleration, and hence leading to superior exits. And anybody from finance knows, I mean, these are the only three things that determine the IRR. So that's broadly what I wanted to communicate. Happy to take questions. Am I doing okay with the time, or I can take some more time? Okay. Okay. So wanted to be conscious about that. So back to you, General.
Thank you. Thank you. So over to Mr. Doshi.
Good afternoon. I will just pick up from where Raj left it.
You'll have to speak a little loudly.
Am I audible? Sorry. I represent a firm called SIA Advisors. We are an investment banking firm, and I'm proud to say that we are one of the earliest firms to work in the aerospace and defense space back from 2014. And while we have not worked a lot with early stage companies so far, it's been a significant change that we are seeing over the last few years in terms of the appetite for investment in this space across aerospace, defense space, and as Raj mentioned, anything which has to do with the criticality of indigenization, securing critical materials and those areas. As far as our firm is concerned, we have looked at it from the lens of capital availability for companies in this sector, which we found back from 2014 to 2019. In fact, the way we look at these sectors in these companies is we divided into two areas, two time periods, prior to 2019 and post 2019. Nothing to do with COVID, but prior to 2019, we saw a lot of excitement to look at the sector in terms of investors' lens from private equity investors, venture capital investors. But there was appreciation, but there was no funding coming through because there was always a concern that there's long lead cycles in this industry in terms of product development, in terms of getting the orders, and then finally getting the dues from the government or government agencies. There was something which was making investors nervous. And I think post 2021, practically, partly due to the capital markets, the way they have been buoyant over the last 4 years, partly because of the risk-taking appetite that we are seeing among all investor classes, whether it is seed funding rounds, whether it is VC funding, and more importantly, a set of class of investors which was hitherto not there probably in this sector, which is the family offices, which are now taking lead in terms of early stage funding, at least in some of these sectors. So what we are noticing now is not just accelerators, incubators, but and seed funds, but we are seeing appetite to invest. Not audible. Sorry, not audible? Okay. I'm not sure it's on. The mic is on. Sorry, just be conscious of time. I'll try to pitch up as much as I can.
Just move it a little closer to you.
I think it's, is it okay? Yeah. So I think the summary of what I want to say is the appetite for investment in this space is definitely increased across different investor classes. Raj's fund perhaps is one of the few that has a thesis and specific thesis on this sector. Most funds have, most other funds have a broad thesis, not specifically dedicated to this space. We are seeing increasing allocation. The way private equity and VC funds work is that every fund has a certain allocation for a particular sector. The good thing we are noticing now is that this space, whether it is space, aerospace and defense, is now becoming a sector which is where allocation is being made by all the investors, whether it is VC or PE or family offices. So in short, the appetite for investing in this space has definitely increased. So beyond bank funding or beyond the grants or beyond friends and family supporting early stage ventures, I think there is a lot of interest among the broader based community of investors to invest in this class of companies. Thank you.
Thank you, Mr. Rajesh. Over to you, Ame.
Good afternoon, everyone. Thank you, sir. So I represent a private equity fund which invests in defense aerospace sector. We started in 2018 and invested almost around in 26 companies now. We were the, you can say, a first fund in the country which had dedicatedly fund which specifically invests in defense tech, a strategic technology, which include the space tech, nuclear tech as well. And of course, the 4 of the companies got listed, and now the traction is so good that a lot of funds are approaching us, and companies are getting equity over there. So we generally invest, when we invest in the companies, the size of the companies are very small at a startup level, you can say. But there has to be certain traction or visibility of order, not at a seed level. And of course, when we evaluate, we saw many parameters to it, and there's a investment committee based approach where when they apply to us, the first level of clearance is there, then we do the detailed appraisal, and the second level of clearance is there. Then we exchange the term sheet, due diligence happen, and then we invest in the company. Generally, it takes 2 months to 3 months for the entire process to complete it. So we have a dedicated team and almost around 9 people team in Mumbai, where we see the companies. In this fund, significant investment is given by Government of Maharashtra. So that is the reason where when we invest in the companies, we can invest in the companies which are either based in Maharashtra or they want to expand in Maharashtra. So that is the one of the critical investment theme when we invest in the companies. So I think that's it. If we'll do next like question answer session and all.
Thank you, Ame. I just wanted you to clarify here, when you say invest or expand, can you just clarify that for everyone?
Yeah, so if the company is based in Bangalore and they will expand in Maharashtra, we can fund the company over there also. Company which is based in Bangalore. So
Thank you. Over to you, Ayush.
Thank you, Lieutenant General Kandare. Good afternoon, ladies and gentlemen. It's a pleasure to be here. My name is Ayush Bagga. I represent T-Hub, which is an innovation ecosystem based out of Hyderabad. Just a little bit about T-Hub for all of our understanding. It's an engine which is run by state, academia, and industry together. By state, I mean the IT Ministry of Telangana. By industry, I mean Tech Mahindra and Cyient. By academia, I mean ISB, IIIT Hyderabad, and NALSAR. Now, the entire idea of having an innovation ecosystem like T-Hub is to support the entire startup ecosystem across different verticals in market access, funding access, mentorship, and other bits which are required to make a startup expand from here on. A very recent focus, and I'm saying recent because T-Hub is currently 9 years old, but 4 years old, 4 years ago, T-Hub started focusing a lot on defense, aerospace, and space verticals. And by focus, I mean the primary responsibility of any innovation ecosystem, be it an incubator, accelerator, or something like a T-Hub, is to help very early stage startups to set their mark, to turn their ideas into a startup, to turn innovators into founders in general. So that's what we are focusing on with a strategic fund in hand and managing funds of different central government agencies like SIDBI, IDEX, and others. We are supporting startups in all these areas. Just to put some numbers in place as well, T-Hub currently has a portfolio of 12 aerospace and defense startups, out of which 3 are space startups at this point. This is through the strategic fund. Beyond that, we have been working with, like I mentioned, central government agencies in disbursing their funds into the startups. There is one trend that we've so far not spoken about. Maybe it'll be good for all of us to talk about during this conversation. And also is that we saw a 55% dip in VC investments into space startups in 2024 versus 2023. And there can be numerous reasons for that dip. to happen. However, one of the key reasons is we need more very early stage startups and ideas to come over and start get raising funds from Indian markets. So that's one bit that T-Hub is focusing on to bridge, and hopefully we will reach with everyone's support, the ecosystem support. Thank you.
And that dip is not a very good news.
Not really, sir.
So
But
you have some targets, some ambition to have in the next financial year, how much you want to do?
yes, sir. Absolutely, we do with partners like MGF Kavach as well at the same time, and other partners. These are established partnerships currently. We are looking at the dip as a step back that we are taking for a leap that we'll be taking in the future. So hopefully we will cover up this dip and go even furthermore in the next year.
Yeah, okay. Over to you, Kriti.
Thank you, General Khandare. Thank you to SIA. Thanks for having me here. It's always good to be with friends. And firstly, I'll just introduce myself very briefly. So I'm Kriti. I'm the founder of Indus Tech Council. We're Washington, D.C. and New Delhi based. We work basically around two lines. One is helping companies with their global GTM. And secondly, we also work with various startups, helping them fundraise both debt as well as equity. So one of the last folks that we helped fundraise was Pivot Chain. I've also worked with C2C, who's present here and just listed. And then I've also been handling international business for Adani Defense. So that's a little bit about me, but I'll be very honest, I'm a policy person thrown into international BD and fundraising. So I'll try to hit on some of the themes, both from a startup perspective as well as from an investor perspective, and then talk about the ecosystem at large. And please pardon me if I'm a little bit critical, but it's all in good faith. Firstly, when we're looking at startups, the defense sector particularly needs patient capital, right? So in defense, given the long life cycle, the long procurement process, you do need patient capital. And so if there's any area or sector where this tussle between a strategic and financial investor is amplified, it's probably the defense sector. So I think we can't have pure play financial, so I think we can't really have pure play financial investors here. So how do we work through that? If you look at some of the most recent successful startups, I'll take an example from the US, Andural. What really happened there were two themes, right? There wasn't necessarily a pure play financial investor. And secondly, rather than having competitive investing or investors, there was cooperative investors. So a bunch of investors came through. They're like, this is a great company. This is a great idea. But it's going to take a long time, and it's going to take billions of dollars. They've raised over $7 billion. So you know what? We're all going to come together, keep putting in money. If I can't, you will, and we're going to make it a success. Can we do that in India? That's the question. Because if we see investing itself is pretty nascent, and defense investing is very, very nascent within India. So patient capital, how do we get patient strategic capital, and how do we also make that financial capital strategic and cooperative rather than competitive? Then coming from an investor perspective, end of the day, any investor is looking for returns, right? They're not here to do charity. How do you enable that commercialization given a sector where you have to really bleed before you can actually get any successes? So when you're looking at that commercialization aspect, even within India, some of the startups that we've worked in, perhaps the guys that do the best are those that have a dual use aspect. This is also very true in the space sector as well, defense and space sector as well. So can we get startups who have that dual use element and can offer some commercialization before they head into the pure play defense and government customers? Secondly is the market size. India, great opportunities, huge growth, but if we actually look at the numbers, end of the day, it's only $75 to $80 billion. It is going to keep growing, but can we also have our startups not just eye that, but some of the other slices of the pies that exist? So can we get a little bit of the slice of Uncle Sam's $800+ billion? Can we get maybe some of the slices of the Southeast Asian market? Sure, very small numbers, 7 billion, 4 billion, 10 billion. But if we put them together, there's a story there, right? So can we get startups that are not just catering for India, but are catering for the world so that it makes it more palatable for the investor itself? And then I'll talk about the ecosystem. Look, there's great promise for Indian startups, right? There are two things that are really working. Scalability. Now that's a function purely of population, the resources we have, that if you have a great idea, if you have a great customer, the ability to scale in India is like nowhere else. But here again, there's a question mark. To have that scalability, do we have the skilled labor? We have educated labor, but do we have skilled labor? Secondly, is cost. We tout a lot about the cost in India. Even when I'm talking, GTM with folks abroad, my first thing is, buddy, the cost you get in India is not can't be beat anywhere else abroad. Now, while that is true in software, is that true in manufacturing? No. Unfortunately, it's not. Even with lower labor costs, it's not true. So how do we make that cost more palatable in a really true story? Third, which I see as a challenge, is reliability. As Indians, we love to promise, but many times, I was just having a conversation just a few months back with somebody in Milwaukee, and I was trying to sell him hard, right? Hey, you gotta move to India, no China, it's all about blue, going blue in America as well. But he's like, why? Why would I? Even if language is no barrier, I know whenever I want, my delivery is done. Delivery and reliability is still something that India is really, really struggling with. And then the ecosystem at large, if we look at R&D and the role of primes, having worked with primes, I think primes in India today still have a long way to go in actually being ecosystem enablers and builders. There's a lot of M&A activity, there's lots happening, but are we really making vendor management programs or looking and scouting for startups who we really nurture, knowing that they're going to be backward integrating some of my own processes, so they're not competitors or a fish to crush and acquire, but actually somebody to nurture. And then finally, R&D. Startups, investing, it's all about innovation. That's where we want to head ultimately. But if you even look at the R&D done by the entire private sector, it's much less than the R&D costs that even Apple puts in. So how can we get those investors that know that I may bleed a little bit, it's going to be a long haul, but I'm going to actually invest in something that's innovative and that actually builds R&D. So just some thoughts over there, and then happy to discuss more. Thank you. Thanks again for having me.
Thank you, Kriti. While all of you have heard the views, but frankly, if I bat for the industry, the plain simple question is, how do they get money with the least number of complications in the processes? And when we, like Kriti mentioned, obviously she's talking for the organization and she's a policy person. So when we look at Uncle Sam, then obviously there are issues of ITAR, there are issues of sanctions if you go a little left or right. So when you even look at either of the two camps in the world, it's half the world that you can service at best. So obviously the industry is always confused. Where is the line which they should not step across? So obviously there is a problem there. And the industry obviously, again, all of them said that in defense, in space, it's a long time that it takes. Investors are not too keen for so much of gestation period. Understandably so, but still we've got to find solutions. And then because there are problems of servicing funds, so then invariably people land up with Dr. Ranjana. So the point here is, I'm looking at all of you. Ask questions, be specific, don't make a comment, just ask questions. So over to everyone in the audience. Rar, I'll start from there, then I'll come to you. Yeah. Just take a mic so that...
Good afternoon to the panel. A very insightful discussion. My question is, I am the Colonel's SDA, presently with the DTP, MOD. And a lot of industries, they come and the biggest problem or the challenge they face is steam is there, but there's no coal to make the steam. Dimag hai, batwa nahi hai, batwa hai to dimag nahi hai. So there's a very big dichotomy in both. Now, we all recognize the importance of R&D. Is it not possible for our venture capitalist, I would rather call you eaglist, because you all eye for those special talent and you have the eye, why don't you scout for those people? You know they have the capacity, they can scale up to those expectations of delivery of your returns as well, and have some funds allocated for R&D per se. That's what, why are we not able to do that?
Valid question. What we'll do is we'll take 3 questions.
Right.
And is there anyone specific that you're targeting this question to?
Say it could be any one of the venture capitalists.
Then no one will answer.
Okay, I'll go to Kirti because she's got exposed to both the markets.
Okay.
So
fine.
maybe she'll be the
Yeah,
best one.
Second question, Jal Brar.
So slightly more of a comment, if you don't mind. The problem with startups are there are about 250,000 startups in India. About just 300 startups are in defense. And if you take 2.5 lakhs, even 50% are in tech, dual use, that makes it 0.004% of startups. Now realizing this, I'm in Chennai, as others would know. I'm interacting with research parks, including T-Hub, including IITM Research Park and other startups. I'm kind of mentoring them. Now, to get technology into Make in India, it can only be done by startups. It can't be done by big companies and integrators. So the problem there is, these guys have technology, but they need guidance and mentorance. That has to come from the defense. So I'm doing as an ad hoc measure. But now, just for information, because I was pushing this point, there's a research cell which has been approved to be established in Chennai because South India generally has the ecosystem for this. So these people can then guide these startups. But the question to this, again, I don't know, nobody will answer. These guys are good. I can tell that they will do something. They may not succeed, but are you willing to support them? There are many of them in and around in IIT Tirupati, ISC Bangalore, all of them, and some other people who are working there. So can this ecosystem be created for them?
Comment is very valid, and I think your offer about this research cell coming up and people reaching out to you is a very valid one. And your question, let us see who takes that on. Third question. Please address it to someone specific if you can.
Sir, I think this question is really to you. Sitting in a very pivotal position.
Then you'll have to speak loudly. I just celebrated my 67th birthday.
So I'm 72, sir. So a question I have for you is, if India really wants to build a military-industrial complex that is not dependent on any of the others, where you have, as you said, ITAR and all of that, would you not announce a Marshall Plan like operation where DARPA-like organization is created? Not this small grants. None of it is going to help you. If you really want to do something big, you need to have mentorship from the defense folks, the defense labs, the industry, so that the entrepreneurs have the benefit of experience of all of these people, and they can put their mind to work rather than looking for money.
I endorse this totally.
3-star has already answered, but let me start by answering from there. Whenever I hear people talking of DARPA, or whenever I hear people of what is being done in China, I have my answer that we need to customize what is best suited for us. In terms of what is the scale of economy that we have, what is the kind of investment that we can do. The challenge is bigger than what is faced by these two big countries, because there is a huge technological and capability differential. But still, as of now, I think we'll have to find our own solutions to this, and definitely not the DARPA model, because when you look at DARPA model and then how they choose their partners and then assured 10 to 12 years of orders. So far, at least the processes are not ready for that. So I understand that there is a huge requirement, but I don't think we need to copy a particular model. However, anybody having better suggestions, which is to be customized, and let me tell you, I had recently a long discussion with Mr. Sanjeev Sanyal. He is the economic advisor to the PM. And there also, we realized within our own economy, there are many sectors which have not been addressed. So, to just purely go by something which someone else is doing, because in their case, their other sectors have all been addressed adequately. I think we'll have to inch towards that, and not immediately would we get into that. Now, for the second question, Kirti.
Thank you for that question, sir. Somebody that I really follow and who is sort of the guru of investing, Naval Ravikant, has said that life is all about investing, about short-term pain and long-term gain versus long-term pain and short-term gain, right? Unfortunately, we are focused on short-term gain, right? There is no premium for innovation. Today, if I'm working, and I'm not blaming the companies, I'm not blaming them, everybody has to fend for themselves, right? Today, if I'm working, my thing is, मेरा कैसे चलेगा अभी? ठीक है, EP में order दे दो, ये cut copy paste कर दो, ये यहाँ से ले लो, ये वहाँ से ले लो, जुगाड़ करके दे दो, right? Sorry for speaking so candidly. Unfortunately, that's the case. And even if you want to innovate with a long cycle, you don't get the money that you desire. And startups cannot be blamed because even the primes are not leading by example. I've worked with primes, they won't like to hear this, but I say this even to their face. Today in the US, it's not the government. Sure, government is investing. DARPA ne jo karna tha, they did in their 70s. But it's the private guys who are leading the R&D. Do we really have folks, private folks who are investing in R&D? Why should they invest in R&D? Is there a premium for them investing in R&D? If I come up with a project, boss, I want to develop this, will there be a market for this 5 years, 6 years down the line? I don't know, so why will I innovate for that? I will just supply what is there right now in EP or RFP and get it from anywhere and supply that. So unless this requires a thinking change, and I don't blame the government has done whatever it can do. IDEX is a great start, but unfortunately we need 100 more IDEX. We don't need just a defense innovation organization. We need a defense innovation ecosystem, AFWorks, SoftWorks, all of them together. So there has to be a mindset change. There has to be a focus on really giving as a society and as a country and as an ecosystem a premium for innovation. And then you won't find that the innovative guys who actually want to do something innovative are registering in Dubai or Florida, but they'll be able to do it outside in Bangalore, Pune, Chennai, Delhi, wherever.
I think one of the things which probably, Kriti, you could comment on, if we want to make R&D lucrative, then maybe at the end of this DefSAT, can there be a recommendation to the government that R&D sector has to be made more lucrative?
For sure, sir. And also, sir, on your earlier point, I respectfully beg to differ. I think that India's punji is the very fact that we can work with the whole world. I don't think that as divided as the world may be, we have navigated this before, we'll navigate it now. And regulations are not an issue. We work on regulations, so please go on this is shameless plug, please go on industech.org. You'll find reports on ITAR, on CFIUS, all of those issues. In fact, tomorrow with SIA, we're launching a report on cross-border issues between US and India, regulatory issues. Regulatory issues are not as big a barrier as they were earlier. I know companies, I'll take a name, Alchemy, right? It's a Virginia company. They are doing their work out of India. They work with the NSA, right? So the frameworks, the IP can be in the US, it can be in another country. And that's how we started even with our IT sector, right? But the replication, the scalability can still come from India. And there is no regulation stopping that. There's no regulation stopping any investment flows. So all of these things can be worked out. And yes, for sure, hopefully with SIA we can
work on this as well, making certain recommendations on how the R&D sector can be bolstered. I'll also give a plug to one of my friends, FAST. It's an organization that about 2 years back also did a very comprehensive report on how to bolster the R&D ecosystem within India. So I really, really encourage everybody to also read that. And of course, we'll be happy to make recommendations that are specific just to the defense and space sector.
A very short question. Would any startup or any MSME be able to export whatever they are producing to Myanmar?
I don't know much about Myanmar, sir.
That's
I'm
under
sorry.
sanctions. Would we be able to export to Zimbabwe?
We are exporting. I know I've worked in Southeast Asian markets. We can definitely export to Southeast Asian markets, Vietnam, Philippines, Malaysia. These are the countries that I've
That's
worked in.
different from Myanmar, because Myanmar is a market which is right next to us. They have tremendous amount of appetite for taking things. But since they are under US sanctions, so the industry suddenly finds that a huge chunk of the market is taken away by China. So that is the point I was trying to make. So that is the issue if we have to answer.
Sure, but I think on the sanctions part, because I also worked on CATSA very, very closely, including with the US DRDO and others. As you know, India did take S-400, but there were no sanctions that happened. I think today, everybody knows the value that India brings to the table. The very fact that, look, one thing that we need to understand, which we often fail to, is that a strong India is in everybody's best interest. Everybody is rooting for a strong India. The US more than anybody else. Because if there's any sane power within this crazy, crazy subcontinent, it's India. And it's only India that can actually put a challenge up to China and the likes. So I think I wouldn't be too worried about sanctions. Again, but I don't know much about Myanmar, but sure, if there's a product we can sell, we can figure out a way to sell it.
Ideally, use cases are something which create an impression. So Tata's had made a contract with Myanmar for, I think, about 1,000 trucks. And they had to leave in between and lose all the money. So such things always are a dampener for the MSMEs and startups. The bigger ones possibly can still manage to digest that. But anyway, coming to the first question, is that answered, or you still want to know from someone? Because you said we need mentors for R&D.
Why they are not able to give some fund or allocate some funds.
Yeah.
The question is not that whether you have funds or not.
Yeah.
We also need to understand that where we have Khandari sir and ma'am also sitting there. There is also a vulture looking eyes and on our people skill. Let me tell you. And backdoor entries also we have to guard against.
Yeah.
So there are so many other factors which are on the table for us to be considering. Just not funding. Funding is just one part of it. But R&D is which is making the brains go away from investment as a startup system, sir.
Yeah, Dr.
Sir,
Ranjana
I
wants
would
to
like to
take
answer, add to your basically your question is see, IDEX is a part of a developmental order what government is giving. It is not like that we don't fund. We funded 15 IDEX projects. So we are funding all startups, all companies. As an individual also people are funding. So it is not the case anymore that R&D is not funded in India. Private capital is there. Now private capital also grown up, and companies are getting, if the companies is investable and investment worthy, they are getting the money.
Dr. Ranjana.
I think I'll just add to a very quick option that we have provided. That is, we all talk about deep tech, and we say there are the unique solutions which nobody else can make, and most of it is happening with the academic intellectuals who are innovating on the breadboards and then coming out with something. So what we decided is, as DRDO, we would like to fund these startups as a seed funding for them to go and ask all these venture capitalists that at least they are ready with the technology which has been proven. And when I say it's been proven, it has been well reviewed, well thought of technology as a phase 2. So we have already invested 3 to 4 years in that, not just by the researchers. We are also invested our review mechanisms, our people who have been experts in that areas, all our might we have brought to this level, and we are ready to do seed funding for the startups. So that's one pathway we have provided for those startups, so that we don't allow that technology to go get lost in this entire whole system. So that is one way we have given. Another thing I think is also, I would be very candid, the kind of salaries we are paying to researchers for the R&D is very less. And I really insist, we are in fact about 1,000 JRFs, SRFs I am talking about, and I don't feel good paying them what we are paying them. So probably that could be a recommendation from here also. The researchers, the JRFs, SRFs who are working on these research projects need to be paid better to have a credible R&D in the country. And these are also the manpower that we are making for all the industries to absorb. I'll tell you, some of them are really good and really expert at very, very niche technologies which are worth following, and they are absolutely at the cutting edge of their work. So this is something which is happening, but they are not having enough opportunity in the industry. They are, even if they are getting the expertise as part of the project, they are not getting that kind of work in the industry. So industry also need to get the appetite for those kind of deep tech work. I think other questions I'll take it up later.
There's no time to take up later because I've already got one slip and one phone call. So at the cost of being unpopular, I think I can at best take one question which is here.
Yes, my question would be not only about investing, because usually if you invest, you want to exit. And when you exit, you want to make sure that compliance is there, because if there's no compliance, you will not find any other investor. And so I was a little bit surprised about the answers. Yeah, you are investors, you go in usually because you want to exit with a success. To have a success, you need to have someone investing after you. That means you need to have companies which are compliant. Not going now into too deep with sanctions and so on, but maybe you can say a little bit on your exit strategy also, from a private investor, but also from a government perspective. Thank you.
Yeah, so just for the information, we have done 10 exit last year. The most acceptable exit nowadays is public issue. For the small companies as well, out of 10, 2 public have done, and 8 been bought by some other bigger investor. Nowadays the capital market is so good. We are seeing that as an individual also, when we apply, we don't get, the demand is so huge. Is only because of the ecosystem has grown that well. Governance point of view, definitely as an investor, when we sit on the board, we bring the governance on the company's point of view. It is when it's a small company, they have a lot to do other things which is more important than governance. And it's the regulator also, maybe they understand, but broadly they also understand that let be ignored for a time being. So they have, with little bit of capital, when we invest, we bring that kind of discipline in the company to create the records and keep it the bookkeeping and all, and that's how we can attract the bigger investor also. So we have and this is also one of the you can say responsibility for a venture capital fund. When they invest in the company, they have to do it, other than the connecting to other people and getting help them to get the business and other funding and all. But this is the most important part, I feel. We have to do, we are doing it, and that's the reason you can see 1 year, last year 10 exit, 2 more are this month, only 2 more are there. So there's a lot of investment, and these all investments are coming from private individuals, and they are also investing a big capacity. So like maybe 100 crores also one person is investing this kind of funds, which was not a case 3 years before. But now for R&D, for growth capital, individual is taking this kind of calls of investment.
There was a question about, I think there was a question about, directing technocrats who want to set up, companies. I think it is from you, if I'm not mistaken, in Chennai. Please route it to us. We are trying to form a group of 7 families which are looking to invest, as somebody mentioned in the panel, patient capital in this sector. So this is not like a VC fund or it's just a collection of families coming together to invest in this space, largely driven by a nationalist view, not so much from a commercial view. So that's something which will help this capital.
That's a good one. Okay, we come to the end of this discussion. Thanks, panelists, and thanks, audience. Please give a big round of applause to the panelists. Thank you. You've been a very good audience. Thank you.
Thank you very much, everyone. With this, we come to end of another engrossing session. We'll have a quick group photograph as well before we proceed to the next session. We can have a group picture. Yahi par. You need to push back the chair and then come in front. Now you can come in front.